Hey Pirates! Today, I'll be deviating from my usual tech-related content a bit and share my experience of buying my first home. I bought my first home about a year and a half ago in late 2021 as an investment. Now, I know the title of this video, I bought a home for free, sounds like clickbait, but it's not entirely false. If you want to know what I mean by that, be sure to watch until the end. As you might recall, the housing market in 2021 was incredibly competitive due to low interest rates, with everyone scrambling to purchase a home. Buyers were even offering tens, if not hundreds of thousands of dollars over the asking price just to secure a home. My wife and I were no exception. We were also in the bidding war. After searching for about a month and losing multiple offers, we were on the brink of giving up on buying an investment property. That's when we met this home, a 3-bedroom townhome in northern Seattle listed at $500,000. After analyzing the market and potential return on investments, we decided to submit an offer with an escalator maximum of $580,000. To make our offer even stronger, we waived all contingencies and released a 10% earnest money deposit of $50,000 directly to the seller, and it paid off. We won the bid even though the seller had over 10 offers on the table. The final sale price, $560,000. Here are the criteria my wife and I used to choose an investment home. Firstly, we made sure that the potential rental income was higher than the mortgage expense. We didn't want to risk losing money on the property, so we only considered investments that generated a positive cash flow. We carefully researched the market, meticulously analyzed our investment options, and only submitted an offer if we were confident that the rent would exceed the mortgage. Secondly, we aimed for a relatively new home, preferably one built within the last 5 years, to avoid having to deal with costly repairs and ongoing maintenance expenses. Thirdly, we looked for a 3-bedroom home with an attached garage since our research showed that such homes had high tenant demand. Finally, we made sure that the investment property was a home we ourselves would like to live in. Let me explain why I believe our home was a good investment. Firstly, Seattle's exorbitant housing prices make it difficult to find a rental property that generates more income than the mortgage expense. That's why we didn't hesitate to put in an offer for this home, because even if we overpaid by $80,000, we were certain that we would at least break even from the rental income. To illustrate, here's a detailed breakdown of our property's income and expenses. We purchased the home for $560,000, which was $60,000 above the asking price, but $20,000 less than the maximum we were willing to pay. We made a down payment of 25% or $140,000 and obtained a loan for the remaining $420,000 at a 3% interest rate, resulting in a monthly mortgage of about $2,100. Adding in the $110 monthly homeowners association fee, our total monthly expense to operate the home was $2,200. On the other hand, we collected a monthly rent of $2,600, which means we made a passive income of $400 a month while our tenant pays off our mortgage. Essentially, apart from the initial buying cost, there are no additional expenses incurred in maintaining the home. This is why I said I bought a home for free. Secondly, the property was a good investment because it was relatively new. The home was less than 5 years old, so there wasn't much maintenance required. The interior and overall appearance were also modern and stylish, making it highly desirable to potential tenants. Thanks to the high interest, it wasn't too difficult for us to find our first tenant. If you've been following my channel, I briefly shared in this video that my wife and I still live in an apartment paying rent. Let me explain why my wife and I decided to invest in real estate before buying our first home. First, we wanted to better prepare ourselves for the Seattle housing market. Given how exorbitant the housing prices were, we felt that if we were looking to buy our own home, we would probably have to search for a much more expensive home, probably over $1 million. Second, we didn't want to rush into buying a home and get caught up in a bidding war where we might end up overpaying. Third, reading the book Rich Dad Poor Dad made us realize that our primary residence is not an asset since it costs money to maintain and pay for the mortgage. Fourth, the book How to Invest in Real Estate by Brendan Turner and Joshua Dorkin taught us that there's always a good deal in the real estate market regardless of market conditions. This gave us hope that we could find an investment home that made financial sense, even if the market favors sellers. Lastly, we felt more comfortable searching for a $500K to $600K investment property than stretching to buy a $1 million home. Looking back, we're pleased with our decision. Considering how much the housing market has cooled now, I'm glad we made a decision that was well within our risk tolerance. If you're interested in learning more, I recommend checking out the books I mentioned. My affiliate links can be found in the descriptions and comments below. To provide a more balanced perspective on my real estate investment journey, I think it's important to discuss the cons and risks involved. Firstly, the biggest hurdle is seed money. While there can be minimal ongoing costs in managing a rental property, you need a significant amount of money upfront, especially for the down payment. Secondly, there's always uncertainty when it comes to investments, and real estate is no exception. Like all investments, there's no guarantee that the housing market will remain stable, and home prices may decrease unexpectedly. While homes usually appreciate in value, there are no guarantees. Thirdly, vacancy is costly. If the home remains vacant and unoccupied, it can become an expensive expense. For instance, in the case of my property, I would have to pay $2,200 a month until a tenant is found. Therefore, it's essential to conduct thorough research and set the right price to maintain a steady cash flow. Finally, renting out a property involves dealing with people, and tenancy is another big factor to consider, as there's always a risk involved. You can never be sure who your tenant will be and how they will treat your property. Therefore, I had to invest extra time and become familiar with local rental laws and acquire the necessary tools to screen potential tenants properly. To summarize, my first real estate investment required extensive research and studying the market. Although the $400 monthly passive income may seem small, the experience gained was priceless, and I really enjoyed the whole process. I also feel fortunate to have had the financial means to invest in real estate, as not everyone has this opportunity. Without my software engineering job, I probably wouldn't even have considered investing in real estate. For this reason, I encourage those who are interested in high-paying jobs to explore becoming a software engineer or finding a job in the tech industry. Although I cannot guarantee a six-figure salary, I believe acquiring tech skills is one of the fastest and easiest ways to aim for a high income. If you're determined to give it a try, take advantage of my deals on Springboard and Careerist. You can get a $1,000 discount on Springboard's tech bootcamps and $300 off on Careerist's tech job programs with my coupon code and affiliate links below. Alright guys, I hope you enjoyed today's video. It was a departure from my usual content, but my wife and I found our real estate investment journey to be invaluable that we couldn't keep it to ourselves. We even continue to learn about homes and market trends by attending open houses regularly. With that said, let me know in the comments below if you're interested in hearing more about my real estate investment experience in my future videos. Don't forget to like and subscribe. I'll see you in the next one. Bye bye.